Let's talk more about those market movements with Gary Booysen from Rand Swiss. And just because it's the last thing that I saw on our screen before I introduced you, Gary, I want to start with the Rand. Under 16 Rand against the US dollar. What were the major contributors there?
Yes, I see. We're seeing a little bit of a recovery in commodity prices, and as we know, the rand is very, very correlated to the movements in commodity prices. So we did see the resource index up strongly again. It was up strongly yesterday. I mean, we are getting slightly lower volumes both overseas and locally, but with the resi up 1.31%, and just the idea that we've got Shanghai reopening as well. We had plans out of China announcing that the very, very aggressive lockdowns are going to probably be lifted in the city by the 1st of June. I think that just buoyed, international sentiment as well. If we are going to get growth internationally and we're not heading into a deep recession, that's obviously benefits commodity prices and by extension that will benefit the rand as well. So we saw us moving all the way down below 16 rand to the dollar for the first time in a long time. The dollar, if you look at the dollar index, has been sitting at kind of multi-year highs. So nice to see a little bit of dollar weakness, a little bit of money moving out of safe havens back into the slightly more speculative emerging markets.
No, absolutely. Let's move on to the JSE then. A similar close to what we saw yesterday, Gary. I think yesterday was about 0.8, today about 0.7. I mean, were there big volumes? I mean, yesterday it wasn't a very voluminous kind of trading day. Did it look very different today?
No, you still get the sense that the markets are fairly quiet, and it's not just a local phenomenon. It's happening internationally as well. We're going into a slightly quieter period. So volumes, yes, not anything to write home about. But yeah, as you said, all share index up about 0.7%. As I mentioned already, resources up well over 1%. Industrials also being lifted, and that was really just a recovery in mass and process, both up over 6% today. With that, I suppose the optimism around China. There was a little bit of corporate news, but not too much. So we obviously had results out of Pick n Pay. We saw on the downside, Pick n Pay was up over 1%, but we saw, kind of leading the downside, Woolies down almost 3.5%, Shoprite down almost 3%. So maybe they're a little bit cautious about, maybe investors a little bit nervous about what they're seeing out of Pick n Pay's results today.
No, absolutely. And I want to get into Pick n Pay, Project Red, coming onto the scene. This is very interesting, Gary. I want to get your thoughts on this because Shoprite has got that market on lockdown. And Pick n Pay are confident that this is going to help with their profits over the next few years, maybe 2026. What did you make of that announcement when it was released this morning?
Well, I think they have to do something. So Shoprite has just been so incredibly dominant in claiming market share in South Africa. Part of it has been their online business model through Checkers 6060. That has been an enormous success compared to something like Pick n Pay's ASAP. So there were a couple of announcements. One, obviously the splitting the business into three more distinct brands. Obviously Boxer servicing the lower end consumer, and then, as you said, this Project Red that's aimed at kind of the middle income consumer, where I think Pick n Pay sees a big opportunity with Shoprite having moved so aggressively with their Checkers brand into the upper LSMs. So absolutely a splitting of the brand, but also it looks like a conclusion to a long negotiation with Takealot and Mr. Delivery just to assist with that home delivery fulfillment. That also coming through in the results.
What do you think the outlook will be, Gary? Just before we wrap up, I mean, they do have one of the lowest profit margins out of the big four retailers, and them entering these segments that I've mentioned are already dominated by the other retailers. Your thoughts on their success rate here?
Well, I think they're coming back swinging. You can't sit down and die. So it's, I think Shoprite really attacked the higher LSM market. They attacked the more affluent consumer. And I think Woolies took the brunt of that pain. But I think where Pick n Pay is seeing it is, while Shoprite might be focusing on the upper LSM, they're clearly seeing a gap here. I think what is critical for their business to turn it around is the idea of getting that online fulfillment and the online purchases a little bit more robust, and I mean they've earmarked a lot of spending in that space. They're predicting by 2026 to see an 8-fold increase in online sales. So I think that is one opportunity for them certainly, but also just I think a simplification of their business. So this year Peter Boone has focused on just reducing the number of items that are sitting on shelves, saying that the business is maybe a little bit too complex at the moment, and by simplifying it, they will be able to deliver the offering a little bit better.
That chief executive, a year into a job, and is already aggressively implementing that strategy that was previously spoken about. We will be hearing from him in our next bulletin, Gary. But well, I'm done with you for today. Gary Booysen from Rand Swiss, they're making me lose my train of thought. But as I was saying, we're going to be speaking, well, not speaking, but hearing from the CEO of Pick n Pay about that strategy in the next bulletin.